Video we'll be doing basically a total rundown of how I trade on a day-to-day basis, right? Starting from how I analyze from the higher time frame into intraday structures and then taking entries. In this video, I'm not going to use Wyckoff, right? Because honestly, I don't use Wyckoff on a day-to-day basis. If I see it, I'll take a trade, right, using Wyckoff, but it's not something that I look for because once you understand structure, then there is no need for Wyckoff, honestly, right? So let's get into the video. So in this video, we'll start on the 4-hour time frame, or we can even go on the daily, right, just to identify the trend. I am not going to trade from a daily time frame because I am not a swing trader, but it's good to identify the trend that the daily is in, right, so it doesn't mislead you on like the smaller time frame. So it's obvious that the daily time frame is in a bullish momentum, right? So let's go to the 4-hour time frame. So on the 4-hour time frame, right, looking at this portion right here, we don't need to go all the way back because we already identified that this is in an uptrend, right? So we're just gonna identify current current structure, right? And this is actually a trade that I caught, right? So firstly, you're gonna want to identify 4-hour structure, 4-hour highs and 4-hour lows, right? So on the 4-hour time frame, we identify that this, remember, we're coming from all the way down here, so this would obviously be a higher low, right? So 4-hour higher low, right? And if this is a higher low, we broke this high, so obviously this is a new high, right? All right, so the market pulled back, right, and created this new high low because it came from a high and it's higher than this previous low. So this right here for high low as well. All right, notice now how the market push up, right, but fail to break this new high, right, and then pull back and then push and create a new high, right? So what this is saying is that this right here is just a complex pullback, right? Meaning that on a smaller time frame, this is a trend. So it's basically a trend within a trend. So this probably is 1-hour trend within a 4-hour trend. So in other words, from this 4-hour high low to this point right here is just one impulsive move on the 4-hour time frame, which makes this 4-hour new high instead of this, because this did not create a high. So that is just a complex pullback, right? So now that we have identified the 4-hour structure, which is this point right here, this point, and this point, right? So from a 4-hour time frame point of view, from a 4-hour high, we need to create what? We need to create a new higher low to continue this uptrend. And normally we create higher lows in what? In discounted price. So more than likely we're expecting price to push back to at least equilibrium price, right, where persons that want to buy can buy at a discounted price and not at a high, right? So from my point of view, from the market created this new high, I'm expecting the market to actually give some sort of a high low to continue the 4-hour uptrend. Now let's analyze now the 1-hour time frame, because we go into the intraday time frames, right? My intraday time frames are really like the 1 hour, 15 minute and stuff like that. So on the 1-hour time frame, I am just gonna use I'm just gonna use a green box to identify the 1 hour structures, right? So obviously on the 1 hour time frame, this right here is a high, right? This is a high low. This is a new high, right? This is a high low, and then this would be a new high, and then this right here would be a higher low, right? So right here we have the 1 hour time frame and the 4 hour time frame having the same high, right? But from this high higher low on the from this high on the 1 hour time frame, we created higher low, right? Because we came back to at least 50% of 1 hour higher low, right? So we actually came back to a discounted price. So I would go down now to the 50-minute time frame to look at this retracement right here, right? So let's go on the 50-minute time frame, because remember we're trying to get an entry and we're not going to take entry on the higher time frame. So we're breaking down every single structure on the different time frames that we trade, right? So on the 15-minute time frame, right? On the 15-minute time frame, we easily identify that I'm going to use a yellow to identify 15-minute structure. So this is a low, this is a high, this is a higher low, right? And from here, the market push up, created new highs, right? Then the market push down, create a higher low. Then the market push up and create a high, right? So the market pushed down, created another higher low, and then another higher high right here, right? So to take an entry on this, right? To take an entry on this, remember we're looking to go what? We're looking to go bearish, because on 4 hour time frame we're supposed to create a new higher low, right? So we're looking to go bearish, but on this time frame we're looking for a breaker structure as well, right? We're looking for a breaker structure because we're looking for a 4 hour to create a new higher low, and we're also looking for the 1 hour time frame to create a new lower high to continue the downtrend, right? Or to start a downtrend basically. All right, so market broke this area right here. Market broke this higher low right here on the 15-minute time frame. All right, so the market is basically in a downtrend on the 15-minute time frame, right? So what we're looking for now is actually an entry, right? And for us to get an entry, we want price to come back actually where we want price to come back at basically the premium price for us to get that sell opportunity. So to get a premium price, the market should at least go back to the equilibrium price, which is the 50%, right? Let me change this. So it would be ideal if the market can push past the 50% into like the 786 level, which is ideal premium price, right? So let's play this. All right, so now that the market is actually retracing, we can actually go to a lower time frame. We can actually go on a lower time frame to identify the trend on this time frame also. So we will take an entry when this little uptrend right here breaks into a downtrend, right? So you notice how we identify structure all the way from 4 hour, 1 hour to 15 minute, and then now on a lower time frame below 15 minute, right? So I'm going to use purple to identify this structure right here. So the market created this low right here, this high right here, this high low right here, right? Then the market push up. Let's play this. The market create a high here, the market create a high low here, right? The market create a high here, high low here, high here, right? All right, so look at this now. Notice now how the market created this high low right here, but failed, right? So the market failed to create a new high, and then the market broke structure right here. So we had a break of structure right here, which means that now the market is what? The market is in a downtrend. So right now we're actually looking for a point of interest to actually take our entry, right? And remember, on the 15-minute time frame, this right here would be our what? This would be our lower high to continue the downtrend, right? So if this is our lower high, this must have been our low right here, right? So if you're gonna actually take a trade on this, let me remove this. If you're actually going to take a trade on this, your first target would be this low right here, because the market should at least give you a low, because from a lower high the market is supposed to create a new low. So this is our safe spot right here, right? Now where entry is concerned, let's get back our discounted and premium price fib. You notice now that price is actually in the premium price where we're looking for sells, right? Now let's go down now to the entry, right? So the market broke structure, right? Looking at this, we have a order block right here. Now the market transferred this money from this order block into here to this order block right here, which left inefficiency right here, right? So money have been transferred, right? Notice that there wasn't there was no mitigation right here, so nothing actually came back to this area to actually push back down. So there is unaccounted orders left in this area, right? So this right here would be your point of interest for your entry, right? So you can either set a pending order right here, stop loss above your sponsor candle, right? And then target all the way down here, right? Easy 1 to 18, easy 1 to 18, right? let us look at another example, right? So this was GBP USD, and I literally just trade like GBP USD, Euro USD, and gold. Sometime I trade USD CAD, but that's pretty much it. GBP USD and Euro USD, right? So same thing with Euro USD, right? Let's move here. So we're gonna start from the 4 hour time frame. All right. So starting from the 4 hour time frame right here, we can see that the market is in an uptrend, obviously, right? The market creating higher lows and higher highs, right? So from this point here, the market created this new high because we broke above this area, right? We broke above this area, right? Then the market pushed down and created a higher low, right? And then the market push up. So notice the market push here and failed to break this high. So this is just a complex pullback. So maybe on the 1 hour time frame, this right here is just a trend within a trend, just like what we just went through a while ago, right? So here would be our new high right here on the 4 hour time frame. So on the 4 hour time frame, the trend is literally looking like this. All of this between here is just complex pullbacks, right? So let's go down a 1 hour time frame now. Hold on, let me remove those. Okay, 1 hour time frame, right? So on the 1 hour time frame now, let's look at current price. We can clearly see, let's use green for the 1 hour time frame. We can clearly see the market moving from a low to a high to a higher low. Then notice which one of these structure broke this previous high, right? It was this one. So this right here would be our what? Our new high. And then this would be our what? Our new higher low, right? Now the market literally broke this higher low, which means that the market is now transitioning into a what? A downtrend, right? Nice. So the market broke structure. Now if I reach for my, hold on. All right. So if I reach for my discounted and premium fib, right, and I actually pull it from here to here, you notice that the premium price to sell at is all the way up here, right? And what do we see at a discounted price? We see a order block, right? So this order block now becomes our what? Our point of interest, right? Let me use two lines to represent that. So this is our point of interest. Nice. So we want price to come back at least into this premium area for us to get a sell, right? And if we get a sell on this, then this low right here would be our target, right? Because from a lower high, the market is supposed to create a what? A new low, right? Once we're in a downtrend, right? Because market creates lower highs and lower lows in a downtrend. So this is the 1 hour structure. Now this is the pullback. Let's see how it looks on, say, the 5-minute time frame, right? All right, so the market pulling back on the 5-minute time frame, right? And remember, this is our zone that we're looking to sell, right? So I'm gonna use what? I'm gonna use, say, purple to identify this structure, right? So the market created the low here, the market create a high here, then the market create a what? A higher low right here, right? Then the market created a high right here, right? Then the market create higher low, right? And then the market pushed to the upside, creating highs, right? Now let's play it and see what's up. new highs right here. High low right here. Alright, high low right here. Then the market created new highs right here. Boom. Right. All right, so the market created a higher low right here, right? Boom. The market now failed. Look at this. The market failed to create what? The market failed to create a new high right here and broke back this structure right here. Broke back this higher low, right? So we failed right here. So right now the market is literally transitioning where? Into a downtrend, right? So let's play that. Boom. Right, so let's see now on the, we need to come back anywhere in here to actually get that entry to the downside, right? So I am literally going to go on the 1 minute time frame to look at how the market is pulling back. Let's use our premium price tool right here to see where the market is going to come back, if it's going to go back to equilibrium price or premium price. We need to get the market back somewhere in here for us to get a sell. So notice I went from 4 hour to 1 hour to 15 minute, now 5 minute, and now I'm going to go back to the 1 minute to actually get this sell right here. So let's see, 1 minute, right? So in the discount, in the premium price, let's pull this back a bit. In the premium price region, I am seeing this order block right here. Right? I'm seeing this order block right here. In premium price, right? So remember I said, guys, once you're looking for a sell, right, in the premium price, majority of the time, above 50%, you're gonna see a point of interest here, order block or inefficiency. It doesn't matter the time frame, right? It doesn't matter the time frame. When you're looking for buys in the discounted price, you're always gonna see a order block or a sponsor candle, a order block or a inefficiency, so you can take entries or have your point of interest at that point, right? Now let's remove this because we identify that there is an order block right here in the premium price. So this is where we're expecting the market to actually retrace to, right? So let's see how the structure goes on the 1 minute time frame. Remember, we still need to get that breaker structure on any time frame that we're looking to take entries, right? So let's see, let's play this and see what's up. I'm going to start identifying the structures once we reach to the point of interest. Okay, so let's identify the structures right here now. So let's use, what color for this? Let's use this color right here. All right, so we obviously identify there's a low here. This is a high. This is the higher low. The market created a high right here, and then the market created higher low, right? And then the market push up into point of interest. So let's see where it creates that new high. Okay, so the market created new highs right here. All right, so the market created new highs right here. The market created new highs right here, and then created what? The market created new higher low right there. The market pushed up, right in our point of interest. The market pushed up right here and failed to make a new highs. So what this is telling us is that the market is running out of momentum to the upside, right? And now we break into, or we transition into this downtrend right here. Notice the market broke structure aggressively right here, right? And left what? Left inefficiency right here. Boom. So the market left inefficiency right here. So this inefficiency right here would be my entry, right? And notice why we use our small time frame is to actually minimize our stop loss, right? So there's a little gap right here, so I'll just extend my stop loss to like a little bit above it. So this is like 1 pip stop loss, right? And remember, it depends on your broker. You can actually get 0 point something pip stop loss, right? But you have to bear in mind that your broker has spread. Some broker has more spread than some. With IC markets, I'm good because most of the time Euro USD is like zero spread. So I would be safe anyways with a 0 point say 5 or 0.9 whatever pip stop loss, right? Now you'd extend this all the way. Remember, our target is 1 hour low, because we're supposed to create what? We're supposed to create new low. So let's look back at this right now. All right, look at that. Notice the market filled this inefficiency gap right here and then retrace, right? So let's see if that was a true mitigation. Boom, the market created what? A order block, which means that your money has been transferred. So money has been collected, right? Boom, money has been collected right here. We created a order block, right? So this is a true mitigation right here on the 1 minute time frame where we had our entries. And notice, as I said before, we came all the way from 4 hour, identifying 1 hour structure, then identify 50 minute, and now we're identifying the 1 minute structure to get that entry. So you notice how all the time frame ties in to get this perfect entry right here, right? So let's play this. Boom. I think this is already probably say 1 to like 20, right? Because overall risk is what? The overall risk to reward ratio is 1 to 63, right? That's 63% risking only 1% of your account. There we go. Notice how we have this huge drop right here and market literally just come back to retest that and then push all the way down again. So this could have been another re-entry right here, right? So alright guys, that's it for this video. I hope you all learned a lot from this video, and this will impact greatly on your trading.